On Wednesday, Rivian released its fourth quarter 2023 earnings results. It's basically a disaster. Still though, you should probably buy the stock. Okay, this is where I tell you that I am not a finance professional. This is not financial advice. Don't listen to me. But if you do listen to me, load up on Rivian stock. So I don't buy automotive stocks because I report on them and talk about them, so it's not really ethical for me, I feel, to buy automotive stocks. But if I did, this is like almost like a no-brainer to me. Okay, so before you buy stocks, you should know as much as you can about the company that you're investing in, because it's not just about shares and number of prices. If you have insight into a company, you kind of can see their path going forward and have some amount of confidence or not. Whether it will be a profitable company, whether this will be a good investment or not, whether the share price will go up. I think you can have a good amount of confidence that the stock is going to go up. So right now it is trading at $11.38. Yesterday, I believe it was around 15 or so. It's seen highs in the last few months up around $25, which is a significant increase, right? And I think it could get back up in that $25 range sooner than later. Maybe not for a long time. So this story is a little bit complicated. So there are a few drivers behind this collapse in the price, but the financials don't seem that bad really though. So for its fourth quarter of 2023, revenues grew 167% year over year to $1.315 billion. So $1.35 billion. That's a lot of money. That's great. That's translating to a non-GAAP net loss of $1.308 billion, or $1.36 a share. I believe that the analysts were looking at $1.32 a share loss. So it's like it was just off by like 4 cents. On lower, but in the expected lower revenue. So, it doesn't seem like it's that bad. So what else is going on here? One of the big drivers of this price fall, I believe, is future expectations. So, but let's look back at the last year. So 2023, they produced, I believe, 57,000 vehicles, which is like 7,000 more than they projected, which is great. But for the year ahead, it's predicting about the same amount, which is not great, obviously. But they're also like shutting down production for a little while in Q2, I believe they said, to make some improvements in the technology of the vehicles, which will lower the cost of the vehicle. So, make each vehicle will make more profit for the company after that going forward. Still, the 50,000 mark of the not increasing production is a bit troubling, because it makes you wonder, well, do they have enough demand, really? Or is it a production issue? Can they not produce enough vehicles, or what? So they should have a demand issue, because, well, for one, the vehicles are great. Owners love them. They're like at the top of owner sentiment. The people own them now are more likely to buy another Rivian again as their next vehicle than any other brand. The thing is, not enough people know about Rivian, and also their vehicles are at they're at the high end of the market, so it's a smaller addressable market as well. That's something that's going to change though. The company just showed off or teased its next product, the R2 line, which will come in, an SUV, probably a pickup truck, and maybe a third vehicle. We're not sure yet, but we're going to see that vehicle unveiled March 7th, not very long from now. And I can almost guarantee that it's going to look good. People should be pretty enthusiastic about it. And this $11, $12, whatever share price is going to look really silly at that point. It's going to go up, I don't know. This is my prediction. So it's a prediction. It could be wrong. I'm not a financial expert, as I've noted before. Don't take my advice. This is not financial advice, even if it sounds like it a little bit. But I do expect to see the share price go up to at least $15. I expect the $18-20 range, really. And it may only be for a short time. It may go back down to $15-17, where it's been kind of swimming for quite a while now. I think down the road it'll be worth a lot more than that. But they need to prove themselves a bit before we start predicting like really high share prices. When the company first went public, the share price was nuts. It was out of control, obviously way overvalued, and the market just went on this crazy, I don't know what they were thinking. People got left holding the bag for a lot of money. And so now the stock price basically collapsed. And yeah, so it's been down here at this like $15 to $25 kind of dollar range for some time now. And it's going to have to prove itself, I guess, to get out. One of those things it's going to do to improve the company health is reducing spend. And they've shown that they can make the tough decisions. They're just laying off 10% of their workforce right now, their salaried workforce. That's kind of a significant number. That's a lot of people. And, it's kind of weird. In the past, I've seen companies do this, and often the stock market rewards them for this kind of cost cutting. Not in this case. Yeah, it's kind of crazy. But yeah, but I see it as a positive thing. I think that the company believes that they're spending too much money and they want to get those costs down, so they're making hard decisions. So I think the ability to make those hard decisions really bodes well for the future, as well as this product. So like the whole point of this video is just to let you know that, okay, I think the stock price is on sale right now. It is very likely going to go up, relative significantly from where it is right now. I don't know, 40, 50%. I don't know, that sounds like a good return for a short period of time, and then, if you want to invest like for the future, like buy now and then like hold for the long haul, it's more risky. But I think it'd be a decent investment. I guess we'll know more when the R2 is revealed. You can look at what they have there. So that's going to be a more affordable product. It's going to be available. It'll have a larger addressable market. And they're building a big plant in Georgia right now. They'll be able to turn out, many thousands of them. And yeah, that's the future of the company. That's where all the money is going to be made, in Georgia at that new plant. Yeah, so I think the future is really bright for Rivian. It's got a unique brand, a unique placement. It's got a good product, and the management team seems, pretty smart, pretty good. Yeah, but it's your money, of course. Invest it, don't invest it, whatever. I'm just going to sit here on the sidelines and eat some popcorn and enjoy the ride. Should be a good one. All right, we'll see you in the next one. Ciao.